Hi everyone, let's check my bullish and bearish low time frame Elliott Wave scenarios on Bitcoin, starting with the low time frame very bearish scenario where we have a WXY structure that is already finished, and now we're looking for an impulsive move to the downside for lower prices, where the low that was made over here is a wave B low, and a wave B low or a wave B high, they're also called fake lows or fake highs because they don't eventually cause a complete reversal, but they will eventually be taken. So in this wave W, we're then looking for an expanding flat, which is a 3, 3, and then a 5 wave move in this wave W, and then we eventually have a wave X and a wave Y, where if we look at the target area we had for wave Y, it has been very nicely respected. It's between the 1 and the 1.236, taken from the beginning of W to the high of W to the low of X, and then it is between the 1 and the 1.236. So that also had confluence with my target box, which is now white because after my target box has been reached and has been hit and the confluences have been taken, I always make my target boxes white, and this target box was between 27.5k and 27.7k for then a potential short scenario that we had with the stop loss above the target box looking for downside. Now of course, I mean no financial advice, but from an Elliott Wave point of view, the stop loss break even, maybe already a TP1, who knows, because we also have scenarios where price might still find some more upside. As at 28.3k, we still have some interesting highs over here because last week we had the news pump over here, after which we had the news dump basically to the downside, and there was some absorption going on over here, so there must be some liquidity above these highs, and if price would go through the target box, then that is definitely a next area to look for. In this particular scenario, however, we are looking for an impulsive structure to the downside, which is then a wave 1 over here, followed by a wave 2, which is either already finished, hitting the 0.5 Fibonacci, which is a common target for a wave 2, so that fits absolutely nicely, for then potentially already a wave 3 to the downside, or if price would move to the upside once more, the golden pocket over here in combination with the daily naked point of control at 27.4k is a very interesting resistance area. So that is definitely a level to look for in case price would return to the upside and hit this level. This level basically for me decides if price continues to the up or downside. Of course, that's easy to be said because price always goes up or down or sideways, you know, but this is just an important level on the chart that I think you should note down. If we then have a look at this structure to the downside, if we eventually get into a wave 3, which with this then being a 1, 2, and eventually a 3 to the downside, you want to see the volume pick up, right? We're looking at an impulse, 1, 2, 3 should be usually the strongest and the longest wave of an impulse. So you want to see the volume move to the upside and not only have one volume peak, you want to see the average amount of volume increase while price is moving to the downside. And if we have a look at the CVD Divergences very locally, so I open the AJGR chart, which actually you can find this website in my Discord, as well as the template that I'm using over here, so everything you're seeing. What can we see, right? So first of all, we had this move to the upside, and if I actually jump to the 5-minute, we had some bullish divergences first. So over here, between this low in the middle of this impulsive move to the upside, 1, 2, 3, 4, 5 wave move kind of, you had this range and then a wave 2, and price made a higher low over here, higher low on price. However, on the blue line, we made a lower low, so higher low on price, a lower low on the blue line, which was a bullish CVD over here, for then eventually price moving to the upside. Once this high is taken, the CVD has played out, so basically everything resets back to neutral, and you can hold on to the trade to whatever target you have. And then what is happening just now is if we look to the yellow line over here, price is creating lower highs, but you can see on the yellow line, higher highs all the time. So lower highs on price, higher highs on the Bybit CVD, which basically means there's absorption going on and price is being pushed to the downside. At the same time, you can see that the blue line is moving to the downside with price, but basically if this blue line is going to create, or basically if price is going to create a higher low on price now, but the blue line is showing a lower low, if price would, it still needs to go down a bit more, like the blue line is not low enough just yet to be below this lows over here on the blue line. But if that would happen, you basically have bearish and bullish divergences on this template, which usually, I mean, I recommend not to be traded because you don't know what is going to play out. But at least this doesn't look too good for the Bitcoin price for more upside because of the yellow line showing clear absorption for a move to the downside in this particular scenario. So let's see how that plays out, because that could be the beginning of a potential 3 to the downside in the very bearish scenario here. If we then go to the more bullish scenario, which at the same time will result in a bearish scenario, we have a longer correction. So basically what we're looking for is the WXY is only the first part, where now this wave Y moved from this high, because in the previous scenario this is a wave 1, 2 and looking for downside, but now we put wave Y over here. And as mentioned already, this wave Y is quite a weird one, a bit odd to count. So this high or this high, both are a possibility, where if the high is put over here for wave Y, we then have a WXY, which is then part of a bigger wave W, which basically means then that the correction is going to be extended. So you're going to get a move to the downside in a wave X, before then eventually a continuation to the upside for then a wave Y, and the wave Y would then finish the corrective structure for then a move to the downside, which is likely to be an impulsive structure. So if we then look into this scenario, you can see I pulled some fibs for a potential low of wave X, and these fibs are pulled from the beginning of W to the high of this wave Y. And what we're looking for over here is the 0.5 already being tapped, which is a valid target for a wave X, as well as all the other fibs on the chart, by the way. But also this low over here is very, very interesting. Actually, some guys in the Discord group were mentioning as well that this is a weak low, which can be quite interesting to take. Also right on top of the golden pocket, before then a continuation to the upside for wave Y. So in this wave X, or actually in this W, you can see wave W is quite long. Then this could be an expanding flat ABC, and that is then the first structure. So over here, this is then the first structure of this X or a W, doesn't really matter. Then we have a 3-wave structure to the upside, where again that daily naked point of control, this time in confluence with the 786, pulled from the high of Y to the low over here, has like very, very nice confluence, right? This daily naked point of control, I would like it to be hit before moving to the downside, to be honest, and then have a look at what price is going to do in this area over here. And if one would like to trade, of course, a short over here, or if someone likes to trade a long over here, whatever you do, make sure that you have a plan, you have a strategy, you have entry requirements. And with entry requirements, I mean that you want to see this, you want to see that, you want to see blah, 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 whatever you have. And only if all the boxes are checked of what you want to see, maybe RSI divergences, market structure changes, volume, whatever it is, only if everything is ticked, you enter the trade and then eventually go to your target. While price now at least has a little bit of a bounce, who knows, might actually go on our way to the daily naked point of control. I think that would be pretty nice. And then the low time frame very bullish scenario, which is unlikely, to be honest, is basically that this is a wave over here from the low, a wave 1 to the upside, where clearly this looks to be a 3-wave structure, but we don't look at this being a 3-wave structure. This has to be a 5-wave move, followed then by this being a wave 1. This is a wave 2, before we then have a bigger wave 3 to the upside. So we're basically saying, hey, the low is in, and we're looking for much higher prices. However, this wave 2 is incredibly shallow. It reached a 0.236, which is pulled from the low over here to the high of wave 1. Officially, the 0.236 is not even a target for wave 2, as the 382 is a rare target for wave 2, and the 0.236 isn't actually a target. In a very, very bullish environment, also at the beginning or end of 2019, beginning of like 2020, you could maybe find, like because of the enormous bull run that we had, some retracements to the 0.236, but for a wave 2, those are just extremely rare and only in very bullish, in this scenario, bullish environment. So yeah, I think it is very shallow for this to be a true wave 2. However, in this very bullish scenario, it has to be a wave 2, with this then being another wave 1, a corrective 2 to the downside, and then continuation to the upside. And I do believe if price is going to take this low, it's quite likely we are going to take this low as well, this blue wave 2, which also sits the invalidation at 26.7k. So that is something to take into account, that once price moves to the downside, grabs this low, the very bullish scenario is basically invalidated, in my opinion, unless you might get some sort of a diagonal, but that's like a 1, 2, and then eventually a 3, 4, 5. So eventually you build a diagonal. The problem is, in a diagonal, wave 2 and wave 4, they need to be zigzags. And this over here, this sideways structure is not a zigzag, because a zigzag is a 535 correction, and also the 0.236 is then still not a target for a wave 2. So yeah, many reasons for this not to be a diagonal basically. So the bullish scenario not looking too great, to be honest. So this is what I wanted to say on the lower time frames. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.